to the Rural Classroom Plus. This is Steve Barton, and thank you for tuning in. This is where we take your questions and we ask Rick himself. If you're watching on YouTube, Twitter, or any other outlet, we're going to be pulling the questions from the Rural Classroom Plus, so follow the links down below to go there or go to ruralclassroom.com. Anyone can watch the stream, but to ask Rick a question, you got to be a part of the Rural Classroom Plus. Rick, how are you, sir?
I'm doing very well, Steve. Thank you.
I am as well, sir. Do you have any opening thoughts, any opening salvo for our viewers?
There's so much going on right now. It would be tough to cover it and still leave room for questions. Obviously, the increase that we've seen in the gold price and the silver price is, if nothing else, refreshing for our students, and I suspect profitable for the ones that have been with us for a very long time. My own belief is that it has a very long time to go, but this rally may run out of legs in the very near term. One catalyst, I think, has been the widely believed and correct interpretation that the Fed, with political encouragement, was going to reduce the interest rate in an already fairly strong economy. What that suggests to savers and investors around the world, including in the United States, is that the US society, in particular the political class, has lost any interest at all in defending the purchasing power integrity of the US dollar. And while I think that's very important in the near term, it was one of the most broadly signaled trades in human history, which is to say that much of the impact on the gold and silver market has probably already been expressed in the market in the near term. Make no mistake, this and the ongoing debt and deficits, and the fact that there's really no political concern about it, either in society or in either political party, suggests to me that earlier indications that I've attempted to communicate in the classroom are correct, in the sense that I think that the deterioration in the absolute purchasing power of the US dollar is absolutely baked in the cake. When I say absolutely, I don't mean relative to the Canadian dollar or Australian dollar or the euro or the pound. I think the US dollar will hold its own against other forms of fraud. But I think in terms of the absolute purchasing power of the US dollar, that we have real problems ahead of us. I can't quantify that exactly in terms of the impact that that might have on the gold price or the silver price. But I can say that I'm planning my own financial future in the sense that the increase in the gold price will roughly mirror, the increase in nominal gold price will roughly mirror the decrease in purchasing power of the US dollar. If that's correct, and if I'm correct that the dollar loses 75% of its purchasing power, over the decade, an increase in the nominal US dollar gold price, a threefold increase or a fourfold increase, is not out of the question. Historically, in past bull markets, the equities have outpaced the gold price approximately 2-to-1, with lots of variability. I need to say, too, and it's becoming increasingly likely, that these broad, dramatic bull markets are extremely volatile. And so people listening to this broadcast and people who are students of the Rural Classroom, members of the Rural Classroom, need to psychologically and financially prepare for the fact that in a bull market like this, 20 or 30 or 35% downdrafts are likely. In fact, they're inevitable. If you look back at the decade 1970 to 1980, there were 3 specific instances where the gold price fell by more than 20%, and one where the gold price fell by 50%. And those declines were magnified in the shares. So if you're the type of person that requires constant internal gratification of the narrative by the price, prepared to be disappointed and terrified. Better be prepared. Understand that you should not be shaken out of this market until the reasons for the market to be over are over. Too many people use the existing price levels to impact their own assessment of the circumstance, which is a wonderful way to get yourself killed. in financial markets. I discussed in an earlier segment of the Rural Classroom the fact that I personally sold 25% of my junior holdings. That isn't a call on the market. Remember that I kept 75% of the holdings. I expect the market to go not merely higher, but much higher over the 5 and 10-year timeframes. But I do believe that the junior part of the market was overheated relative to the beta part of the market. I also found that by selling 25% of my junior positions, I could recoup all of my capital investment in the sector and pay capital gains tax on that recoupment while keeping 75% of the upside. In other words, by selling 25% of the upside, I eliminated my downside and I preserved 75% of the upside. I will not be making new allocations to the sector, but I will be recycling cash from positions that I sell within the sector. And I would urge members of the classroom to look at the market in the context of their own wants and needs and aspirations. There is no one size fits all market strategy. The market strategy that makes best sense for you is one that goes directly to you. And one of the things that I noted was I had very large positions in some companies that, while they were attractive, were fairly illiquid. If you have that circumstance, the time to take volume is when you can. And the market gave me that volume and I took the volume. For those of you, and this is most of you, who are newer to the sector and didn't have those enormous embedded gains, the action that I took is less relevant to you. I am likely over-invested in natural resources, particularly given my large shareholding in Sprott Inc. and my historical positions in very large natural resource companies. So for most of you who have a less dramatic proportion of your net worth tied up in the natural resource space and who don't have the same extraordinarily low cost basis as I, the action that I took 8 weeks ago is probably less appropriate to you than it was to me. But I wanted to disclose it and I wanted to talk about my reasons for doing it. I continue to believe that despite the fact that a lot of my speculative money has been made over 40 years in private placement markets, that the terms available to us in private placements are hopelessly stupid right now. And I'm buying on-market transactions rather than private placements. If the terms someday reward shareholders for the risks they're asked to take, I'll come back into the private placement market. And I should give specific reference to 3 recently private placed bonds in the silver market. The silver industry, at least 3 companies in the silver industry, were able to attract $1 billion on terms that were ridiculously attractive. Congratulations to the management team who took the dumb money that was on offer. It says a lot about the fact that the industry, however, is not underfunded, and that the institutional investors who, I guess, funded those bonds are, let's just say that they're not students at the Rural Classroom. Those pricing levels were absolutely extraordinary. I'm not trying to say that the silver price won't go higher and they won't make money. I'm just trying to say that on a probabilistic basis, risk versus reward, those were prices that favored the issuer rather than the investor. Congratulations to folks like Keith Neumeyer who took the money.
Okay.
And I guess that's about enough, Steve, in terms of
All right, we'll try to chat GPT Steve.
Well, you know what? One more thing. For anybody listening to this who hasn't made arrangements to come to the Boca Raton Natural Resources Investment Symposium, last year was well worth your money. And this coming year is shaping up to be absolutely spectacular. We're well ahead of last year in terms of attendance. We're well ahead of last year in terms of program development, well ahead of last year in terms of attracting high quality exhibitors. Last show was a spectacular show. I was delighted by it. Steve, I assume you were. And I'm really jazzed about the work that we've been doing lately. This coming one is going to be even better. Set aside July 6 through 10, whether you attend live or via live stream.
Okay, 6 through 10. All right. In summary, gold and silver are up. In the near term, you could see some weakness, but they have a long way to go in this precious metals bull market. Part of that is probably because the Fed continues to lower interest rates, although on the surface, things look all fine and dandy. Why would they be lowering interest if the economy is going to have a good time? Looks like they might be introducing a little bit of QE. The US dollar is probably going to perform better than other currencies, but its purchasing power will continue to decline. If we follow the 1970s, we're probably going to lose 75% of our purchasing power over the next 10 years. Gold will probably 2 to 4x over that, and the equity should do double about what gold is. During this gold bull market, we need to keep in mind that it is normal to have 20 to 30% drawdowns on this. Be aware of that. Don't be shaken out. As our friend Andy Scheckman would say, don't be deceived by price. Understand that those drawdowns are normal, and I've personally been looking for them on the charts. They usually retrace down to the 150 or 200-day moving average on gold, and that has yet to happen yet. So I'm expecting one of these in the back of my mind, which goes right in line with what you're saying. You personally went PTPOC, which of course stands for past the point of concern, on a lot of your gold and silver junior equities, reinvested those into oil. You're not putting more into the sector, although we're having a breakout. I feel like maybe you've gotten them so
more
cheap.
into the junior sector.
In the junior sector. Okay.
I can tell you, by the way, Steve, that, and I never believed this was possible. In the point in time since I sold 25% of my positions, my account value has returned to the level before I made the sales.
Wow.
Which is astonishing, which is to say that the account is up 25% in 8 weeks. It's crazy. Do I regret having sold? Not at all.
Okay. You're not putting any more into the junior sector, but to give everyone an idea of how the tide has turned, 3 big silver companies have put out private placements, and this was a much better deal for the silver companies than it was for the issuers.
Correct.
Okay.
One further comment that I should have made, Steve, which is to say, despite the fact that the Fed is politicizing the interest rate and driving down the near-term interest rate, they've lost control over the long bond.
Yeah.
They have driven down short-term rates as much as they can, but the long-term rates, much to their chagrin, continue to climb, which is to say that the market is beginning to reassert control at the long end of the interest curve, which is a very, very interesting development and one that people will have to pay real attention to.
Okay. Yeah, because they just control the short end. They don't control the 10-year, the 30, or the 20, or any of that. And also the Rule Symposium, big shout out to that. It's going to be July 6th through 10th, and we're organizing a Rule Classroom meetup there. So we did a kind of impromptu one this last year. This one will be a lot more organized. It looks like it's going to be Rick and I, Adrian, Joe Mazumdar. It should be a lot of fun. So would love to have you guys out for that. Okay. Anything else, Rick, or should I get to the questions?
I think we should go right to what the people are interested in.
Okay. Roll wants to know. He says, Rick has mentioned that he's a fan of Doomberg. How then does he reconcile Doomberg's bearishness on the price of oil and gas versus his own bullishness on the sector over the next few years?
It's precisely why I like Bloomberg. He makes me rethink my own premise. Doomberg is also, I would suggest, more market-centric and market-savvy than I. I pay attention to things like sustaining capital expenditures. I pay attention to market fundamentals, and he pays attention to markets. I would suspect that occasional disparities in opinion are, to me, the principal advantage to me of listening to Doomberg. I don't want to listen to me. I know me pretty well.
Okay. All right. Jean-Marc Stouty, CEO of Riverside Resources. He wants to know, Rick, for oil and gas in the past, you were working to have an analyst that might help you as you were so busy with Sprott Business. Now that you're busier than ever, so much travel and so on, who are the big main management teams in oil and gas that you closely invest in? Lundin is a good one I own. Shamaran. He says he owns Shamaran. What other management groups do you like for oil and gas?
The Lundins appear to be de-emphasizing oil and gas internally within the family. And so I'm following them less. I'm also following small cap names less. I was most successful relative to the market in names under 100, pardon me, under $1 billion market cap in the past. But the sector is so out of favor that I can buy the biggest and the best right now. In other words, I can concentrate on beta and not have to worry about alpha. In fact, when I do desktop reviews of 500 million or $1 billion companies, and I benchmark them against Exxon, while the smaller ones have more torque and may be selling at slightly greater discounts, the truth is when I juxtapose risk to reward, I'm drawn back to the bigger companies. For me, by the way, those big companies have names. I am concentrating on Exxon, the biggest name, which I believe is selling at 60% of NAV, and I believe that NAV triples. I like triples at a 40% discount. That's attractive to me. I own a bit of Chevron because I think they have a lot of leverage in the refining and marketing operation. I think the acquisition of Hess positions them fairly well. I own a bit, no, I own more than a bit of Occidental Petroleum because I like the development pipeline, buying Anadarko, consolidating those interests in the Permian Basin. I think gives them the greatest inventory of undrilled Class A locations relative to market cap in the industry, albeit that is a challenge balance sheet. People need to understand they're taking balance sheet risk with Exxon. Up in Canada, where I get companies cheaper, but I incur larger political risks. I own Suncor, which is a fairly new name for me. I own Canadian Natural, which is in effect a closed-end fund on the Canadian oil space. They're part of everything. It's a Hail Mary. You own the whole thing. I own ARC, which I consider to be the best run mid-cap oil company on the planet. I own Freehold Royalty. I own Prairie Sky, which is a great class of assets thus far underperforming. I own Tourmaline, superb company. I own Peyto and I own Birchcliff. So I hope rather than answering Jean-Marc's question elliptically, I answered it directly.
Yeah, that's pretty good. Okay, you're going big names, not bothering with the small ones. Exxon,
Not yet.
Chevron, Occidental,
Yep.
and then Canada, Suncor, Canadian Natural Resources, ARC, Freehold, Prairie Sky, Tourmaline, Peyto, and Birch Cliff. Moving on to gold developers, who is about to turn into a producer here. Daniel wants to know your opinion on Rio 2's recent acquisition.
I think it was intelligent. I think Rio 2 has, I think they're developing a franchise around taking on assets that other people can't run and bringing them either to production or de-risking them enough that they can be sold. Note in the context of that answer, I'm a very large and long-term Rio 2 investor, so there's quite a bit of bias built into that answer.
Yeah, do you feel like their acquisition of so that's the copper mine out in Peru, that maybe this is a little bit like when G Mining did Oko West? Is that kind of similar?
I think it was opportunistic. I think they saw a project that wasn't advancing as rapidly as it could, where they felt that they had the ability to advance it. The Rio 2 folks are very shareholder centric. They are very interested in growth on a per share basis, not growth for growth basis. So they had to believe that what they gave up in order to acquire this new asset wasn't dilutive on a per share basis with regards to their existing assets. Most management teams don't think about that. They just want to get bigger so that they can justify larger salaries for themselves. I think that the Rio 2 management believes that this asset, relative to their skill set, is accretive on a per share basis, and that says a lot to me.
Okay. All righty. Alan wants to know, moving over to copper. Rick, it seems the market has just shrugged off the Freeport Grasberg disaster. If you didn't own the stock, would you be buying it now?
I probably would, although you're taking a lot of risk with Freeport and, by the way, with Ivanhoe about the technical aspects for the failure. Think about doing a block cave underneath a big open pit in an area where on occasion you get 10 meters of rain a year, which is to say 40 feet. There's a big hole above you that stores that water, and the water wants to come out at the bottom. In addition, this block cave is in a seismically very active area. So there are challenges around Freeport that I think people need to understand. I would describe Freeport, despite its size, as being speculative, a good speculation. I own a lot of it. I'm past the point of no concern in it, but I'm not trying to say it's riskless. There was a circumstance, for those who don't understand this conversation, there was a circumstance a few months ago where they had a catastrophic mudslide, where 80,000 metric tons of mud flooded the underground workings, destroyed them, and by the way, killed 4 workers. The cleanup and the reorganization of the mine in a way to attempt to make sure that this doesn't happen again, and the regulatory scrutiny that this will put Freeport under, is a real challenge. In past times, the Indonesian government has used hiccups in the operation to increase the interests of Indonesians and the Indonesian government of the mine. And so this adds a new element of political risk too.
You brought it up, Ivanhoe.
Right.
I put in a limit order for that today. Ironically, hasn't yet filled. What? How? Any new developments there on their failure at their mine?
Ivanhoe's very cheap, but it's very cheap for a recognizable reason. A lot of their future is predicated on Kukula and their brand new smelter. The brand new smelter will work extraordinarily well, provided you can put enough rock through it. The smelter accomplishes 3 goals. It meets the Congolese government's goal for more beneficiation of resource in the Congo. And Ivanhoe's the first company that's had the courage to spend $1 billion on processing in Congo. It also goes a long way to monetizing Robert Friedland's very aggressive early investment in the Inga hydroelectric project. He's going to generate low-cost hydro for the rest of his life, but he needs to sell it. You can't generate that hydro for the purpose of retail sales in Southeast Congo because there's nobody has any money. Utilizing that electricity through the smelter is a way to monetize a $250 million investment in Inga. And it also really reduces the transportation costs that Ivanhoe faces. They formerly have shipped concentrate by truck 1,500 miles to the coast where they sold the concentrate. That's extremely expensive. What they'll be selling now, rather than concentrate, is they'll be selling copper. And shipping a high-value product as opposed to a low-value product really reduces the shipping costs. The risk that we're running, Steve, is the seismic event that we had underground at Kukula. If you have a roof fail, that's one thing. But if you have a pillar fail, pillar crush, what that means is that both the new mining operations that you do, which is to say you have to mine much less aggressively, and the remediation operation, the fact that you have to support the existing pillars with material that you had on a pad, is very expensive. And we don't know what the answer to that was. My nervousness, given the rate of the water encroachment, which is to say the fail that we experienced with regards to the pumps, suggests that this may have been pillar crushing, a pillar failure, and that'll take longer to resolve. There also is a reporting discrepancy between the way Ivanhoe describes the problem and the way Zijin describes the problem. A cynic, I've been accused of being cynical, might say that the discrepancy in reporting has to do with the fact that Zijin doesn't have to worry as much about outside shareholders because their source of funding is more central in China, and opinion is much more important to Ivanhoe than it is to Zijin, although that is admittedly a cynical point of view. I should note for people, I'm a very large Ivanhoe shareholder, and despite the fact that I'm not buying more, it is an immodest proportion of my net worth.
Okay. You got a long history with Robert.
I do.
Okay, let's okay, Hagen. What's up, Hagen? Good to see you. If Rick had an opportunity to catch up with the Kazatomprom revised management team, what's your current assessment and rating?
Well, that would depend on what the outcome of that interview was. The people who were my best sources of information at Kazatomprom are no longer employed by Kazatomprom. Ostensibly, they resigned. One wonders why, in mass, they resigned. I'm concerned in Kazatomprom by, I'll be charitable and say the slow startup of Inkai, which was the lowest cost major uranium mine in the world. I'm concerned about the direction of Kazakh politics around Kazatomprom, although that may ultimately benefit Kazatomprom. But the truth is that the Kazatomprom that I was attracted to is not a Kazatomprom that doesn't exist anymore. I don't have the same access to information that I had. The middle managers who I thought were very young and very talented, probably the best middle management team in the uranium business, are gone. And the resumption of production that I would have thought would have occurred at a reference price of $75 hasn't occurred. The consequence of that is that I've reduced Kazatomprom to a 5. I probably should have reduced it to a 6. The reason I have it as a 5 is it's simply so cheap compared to Cameco. So on a valuation basis, I have it at a 5. I don't own it any longer personally. I should disclose that. And fives that have good long-term perspectives are usually included in my portfolio. But the interior deterioration has been troubling for me.
Okay. Yeah, that scared me off too when it was just like they couldn't keep anyone there. And I have no idea why. Not even Justin Hune could. Okay, Sam is asking, thanks for doing this, Stephen Rick. You are welcome. Going to start out by getting your thoughts on Banyan Gold and the path forward for the company. Do you see the company being acquired prior to their release of the preliminary economic assessment?
I do not. A PEA is not de-risked enough for a deposit of that size. The market cap is also up fairly substantially from the conference. For people who are interested more in Banyan Gold, Albert and I interviewed Banyan today in the post-conference interview for the 2025 Natural Resources Investment Symposium. When Albert has that interview edited, which I suspect will take a week, you will find it on YouTube at the Rule Investment Media channel, and I would encourage people interested in Banyan to listen to it. But I thought Tara Christie acquitted herself very well in the interview today. She talked about the fact that in all categories of resource, there's in excess of 7 million ounces there. She talked about the fact that exploration, well, the drilling is doing two things: moving material from inferred to measured and indicated, and also growing the size of the deposit, while at the same time increasing how a deposit model might look. She pointed out that in large deposits like this, increases in the gold price are unusually useful because those increases are amortized simply over more ounces. And she talked about the fact that some of the impediments which plagued the company a year ago are gone. The bankruptcy of the adjacent Victoria mine had a couple of consequences. One was the necessity for an operating resolution with regards to that mine. The second was that Victoria owned 8% of Banyan, and that stock was going to come on the market. The third was that Victoria owned 25% of the deposit. And Terra has succeeded in prying the 8.7% of Banyan that was owned by Victoria out of Victoria and into the market. that part's done. And she used the bankruptcy of Victoria to complete a deal with the trustees to increase her ownership and her deposit to 100% from 75%. I believe it's highly likely that Victoria will emerge from bankruptcy with a new owner fairly soon, which is attractive. And Tara pointed out that probably 20 potential parties, when they went to look at Victoria, had to drive across Banyan to get there, which increased the familiarity with Banyan. Uh, Speculative to be sure. You're up pretty close to where Santa Claus is reputed to live. A large deposit, but a large deposit in a place where winter's a real thing. Good infrastructure in place, as she points out. Really, really, really benefited by the stronger gold price. And I think she's a top quality young CEO. I think this young woman's going places. But don't confuse this thing yet with Agnico Eagle.
Okay. All right. Sounds good as a shareholder. Chris wants to know any thoughts on B2 Gold. Seems to be lagging its peers quite significantly.
The easiest response I can give is I'm bid in B2. Your observation is correct. It's cheap. It may be cheap for a reason. That is to say, despite the fact that they've announced technical completion of their new mine, that mine was way, way, way over budget. And as we've discussed before in the rural classroom, it often takes a couple of quarters before the mine, after technical completion, reaches what is true economic completion, which is to say nameplate capacity. If that occurs, you will see the same price response in B2 that you saw in Equinox. Many of you will remember that the Equinox share price fell by half as a consequence of being over budget and behind schedule in their billion-dollar build. The same thing has happened with B2. B2 is very cheap by any metric. The reason for that is simply concern over this new build. If this new build over the next 6 months shakes out, irrespective of any move in the gold price, you will see the share price of B2 double. That's the Equinox analog. I've seen it happen, I don't know, 50 times in my career. Looking further on, two challenges are the company's CEO shows no signs of standing down. He's my age, which arguably means he's past his prime, although he does superb work. People love working for him, and he's a personal friend of mine. I hope for personal reasons that he continues to do well at his age. And the second drawback, looking longer term, I don't think it's a drawback, but the market will. Clive is determined to build Gramalote in Colombia, which is a deposit that the market doesn't like. I suspect that if the opportunity presents itself for Clive to build it, he will build it. And the market won't like that. It is very rare that a company B2 size has access to what is likely to be a 10 million ounce mine, and Gramalote is that. But there are challenges. It isn't merely in Colombia, it's in a fairly rough part of Colombia. And the upfront capital costs of Gramalote will be higher than the upfront capital costs were in their recent attempt, which was, of course, behind schedule and over budget. So there will be challenges. So buyer beware. I'm a buyer.
Okay. All right. What odds would you put at that new one coming in on time, on budget? Like
0.
Oh, 0. Okay.
Yeah.
So
0.
it won't. All right.
No reflection on B2. We're in a point in time where, with the exception of capital goods, things like mills and crushers, capital costs are subject to ugly, ugly, ugly inflation.
Okay.
We are at a point in time where the $7 billion porphyry build becomes an $8.5 billion build, which then becomes a $10 billion build, which becomes a $12 billion build. We're in the part of the part of the capital expansion cycle where while inflation helps us in terms of product prices, it hurts us in terms of capital intensity.
Okay. All righty. Han wants to know, hi, Rick, could you please comment on permitting issues facing Meteoric and Veritas mining? From your experience, do situations like this typically get resolved over time?
The answer to the second part of the question is yes, but the problems are real. In the caldera, uh, we are now reportedly facing opposition from Oxfam. For those of you who don't know what Oxfam is, it's a very large British charity that's in the business of promoting poverty and famine. They're extremely effective at it, and they will be an interesting challenge to overcome. On our side is the fact that the mining industry in Para State in the Carajás region is a long established industry. Most of the economy of that region is mining. The mining industry is well known. The companies have been doing, at least, pardon me, Meteoric, the pioneer in the region, has been doing a very good job with regards to community relations. And they have very, very, very recently completed the pilot plant. So as opposed to talking about community employment from mining, they're delivering it. And rather than talk about the prospective nature of the rare earths product that they will be able to sell to industry, they're shipping at a very small scale, but I think that's useful. My point on Meteoric for a long time has been consistent, which is to say that I see three deposits in the world which have the potential to be competitive with the Chinese and have the potential to be able to provide feedstock to non-Chinese processing infrastructure, which could be built in various places, but likely will be built in Louisiana. It has scarcity value. It is a deposit, not just on the meteoric side. Well, yes, just on the meteoric side, but it's larger than the meteoric side. It's a deposit where the in situ value of reserves and resources at today's commodity prices exceed $10 billion. And it's a deposit where, if the preliminary technical work is correct, would be in the lowest cost quartile worldwide and have be in the top quartile in terms of return on capital employed worldwide. It is a project that likely will not mature for 3 to 5 years, so it isn't suitable for a trader. It's a deposit that still has substantial risk. I looked not too long ago at the little memo I wrote to myself when I bought it. And I told myself that I had to be prepared to wait 5 to 7 years. This was 2 years ago. And that I would likely achieve a 10 to 20-fold upside or a 50% downside. And not much has changed.
That's a good bet to place. In the long run, you win.
I wish I could make 10 of those disaggregated.
Right? Yeah. So Oxfam, I've never heard of that, but it sounds like kind of an Earth Firster type group that just tries to grenade.
Much more effective than Earth First.
Okay.
It's called Oxford Famine Relief. It's been around for a very long time. It used to be a conventional aid organization looking after people primarily in emerging markets that had suffered through catastrophe. It advanced, if that's the right phrase, to being a leftist organization with access to large amounts of private and government funding that is anti-development on a global basis. They look very, very much forward to making everyone on Earth equally poor.
Yeah. Okay.
I had the good fortune 3 years ago at the Future of Mining conference in London to be walking down the High Street in Islington in North London and come upon an Oxfam store. And I took it upon myself to go in the store and ask them what their business was and what they supported, and engage in a very frank dialogue with the employees of the store who knew really nothing about the mission of the mission of the organization. And while I don't think I changed the world, it was probably a better use of my time than going to a pub.
That's awesome. Hopefully they got a got something out of that. Okay, Nate wants to know, Hi, would love to hear your first impression of Visla's recent feasibility study on the Panuco project.
Yeah.
Panuco. The 7-month estimated payback period seems very nice.
It is likely that that mine, like all mines, will come in over budget. You also need to look at the fact that they're a ways away from permitting. So the net present value that they talk about is a net present value from the time they build it, not from now. So before you begin to really price that thing, you need to understand that 2 or 3 years will unfold. That being said, that deposit is almost fictionally good. And I don't mean to suggest that the study is fiction either. I mean, it is insanely, insanely robust. You will note too that that study didn't incorporate $60 silver prices. If you assume that this price will hold or in fact increase, that deposit gets even better. And better yet, they really understand the orogenesis, the origin of that deposit and the geology. So what you see in terms of ounces is not what you're going to get. Um, that was reflected in the pricing of their recent bond issue, which was to be charitable for a non-revenue generating company, very generous. The company now has more than enough capital to build the project. They are going to have to wait on permitting, which with the current president of Mexico will be a torturous exercise. But this mine is a jewel box.
Okay. Patrick wants to know, hi Rick, do you have a view on Norsk Hydro, its bauxite mining operations at Paragominas mine in Brazil, and what is your broader outlook on the global bauxite and aluminum markets? Thank you.
I don't have a ranking on Norsk Hydro. It's a large and fairly complex company, and I haven't felt it necessary for my own account to review it with the view of owning it. In terms of the aluminum industry, you really truly need to be in the lowest cost quartile worldwide. Costs in the aluminum industry are going to increase over the next 2 or 3 years, simply as a consequence of the fact that energy prices, in particular oil prices, are going to increase. Copper mining is energy intensive and copper smelting is extremely expensive. The competitive advantage that Norsk Hydro has exhibited over time has been that their energy costs in smelting in Norway have been very low, both as a consequence of government subsidy, but also as a consequence of very, very low cost hydropower in Norway. But that's all narrative. I don't know enough about Norsk Hydro, particularly to answer the question.
Okay. Han wants to know, after financing, Emperor Metal's share price has had a huge drop. Are you upgrading your ranking? What is the next unanswered question?
My unanswered question around Emperor royalty or Emperor mines is which infrastructure is close enough to it to develop it without having to amortize a mill there. You may recall, Steve, we talked in an earlier episode of the classroom about the fact that in my interview with Amar Al-Jundi at our 2025 conference, I brought up to him the fact that there were 15 or so orphan deposits in the Abitibi, Emperor among them, that were orphaned cycle after cycle after cycle because they weren't large enough to amortize the processing capacity. And what Amar Al-Jundi pointed out to me is that this time would truly be different because there's so much more infrastructure in the Abitibi that deposits that can't amortize a standalone mill on their own can be sold to an adjacent developer who only has to build a mine as opposed to a mill and then truck the rock to existing hungry mills. The challenge I have with Emperor is I can't see a close mill.
Okay. All right. Adam wants to know, when companies issue shares, they value the money more than the equity. Does the percent of dilution give you any insight to that value?
Well, I think if a company that you own is issuing shares, you owe it to yourself to ask the management team how much value per share they believe that they can generate with the new shares. If, as an example, a company has $100 million in pre-money valuation and they raise $20 million, what they have done is that they have diluted your interest as a shareholder by 20%. So you need to ask the management team to explain to you how the new money is going to generate more than a 20% escalation in shareholder value across all of the shares. But I would remind classroom members that the first part of the question is very correct. When a company issues shares to raise money, what they're telling you is that your money is worth more than their shares.
Okay. Jay is asking about sovereign metals falling like a boulder off a bridge. Any
Yep.
views, Rick?
We talked about that a year ago. Many people weren't smart enough to have tuned into our session a year ago. And so for their benefit, we'll recap some of that. The sovereign, for those of you who don't know, is a very large deposit that has two primary value constituents, rutile and graphite. Both rutile and graphite are interesting materials in that there is a lot of variability in terms of price and demand with product quality. The bench scale tests that Sovereign have done suggest that the quality that comes out of that mine with proper processing is highly desirable to the market. Very much like we talked about with meteoric, this is a very large deposit. In situ reserves and resources probably in the $20 billion range. Very, very nice preliminary processing and exploration results, but a lot of unanswered questions. One revolves around Malawi, which is to say a country without very much mining experience and not a lot of regulatory capacity. So there can be real permitting challenges. But in direct answer to the question, what's responsible to the share, for the share price decline? That's something we talked about a year ago. They had a cornerstone shareholder in the form of Rio Tinto. And a lot of people owned Sovereign, not because they thought that Sovereign was a great standalone buy necessarily, but because they thought that Rio Tinto would take it over. Rio Tinto is selling their rutile business, including their port in South Africa. And the consequence of that is that there will be no near-term takeover of Sovereign by Rio Tinto. For people who own Sovereign because they thought a transaction would take place between Sovereign and Rio Tinto, which is to say arbitrageurs, their reason to own Sovereign is gone and they're selling the stock. As we all know, the condition precedent for lower share prices is more sellers than buyers, and that's what Sovereign has. I am a buyer.
Okay. Tells you what you need to know there, Jay. And Jamie is asking, okay, I've been getting questions on this company for over a year. Please comment on graphene, specifically hydrograph, whose patented manufacturing process yields reliably pristine graphene that's one atom thick. Have you heard of this company? Any thoughts on graphene?
Yeah. My former colleague at Sprott, Kevin Bambro, is sort of the voice behind this company. He's been an extremely effective promoter. I need to start off by saying I don't invest in process and technology because I don't understand it. I invest in reserves and resources. And so you are going to need a different commentator than I about the efficacy of this technology and the economics of this technology. I don't own hydrographene because I don't know how to value it.
Okay. All right. Antia wants to know, hi, Stephen, Rick, what are Rick's thoughts on Rio Tinto? Their focus on lithium and decarbonization do not appear very shareholder friendly.
I would agree with that assessment. I like Rio Tinto, but the part of Rio Tinto I like is the iron business and the copper business. They have one very high quality lithium asset in the company, that's Jadar, but there are political challenges to developing it. The rest of the lithium assets that they have are high quality rather than very high quality. And I don't think the carnage in lithium is done. On a global basis, when we went looking for lithium, we discovered 150 lithium deposits. About 5 will make it into production. The problem that we had in lithium wasn't lithium supply, but rather processing and beneficiation capabilities. And the Chinese have taken care of that in the last 5 years. We have plenty now of processing capabilities. To further complicate things, a few little tiny companies, Berkshire Hathaway, Chevron, Occidental, and Exxon, are all investing in direct lithium extraction technology. If that works, which is to say, if you can commercially extract waste lithium from waste saltwater brines, from geothermal and oil and gas exploration, the hard rock lithium business gets really, really challenging. But will that derail Rio Tinto? No. It would, if it occurred, cause a write down of between 5 and 10% of their total assets. Despite the fancy that some institutional investors have taken to electric metals, the only electric metal that really matters to Rio Tinto is copper.
Okay. Getting close to the hour here. So if you guys are watching on YouTube, Twitter, or any other outlet, we're pulling the questions from the Rural Classroom Plus. So follow the links down below or go to ruralclassroom.com. Anyone can watch, but to ask a question, you got to be a member of the Rural Classroom Plus. Patrick wants to know, hi, Rick, when you talked about the need for increased future capital in oil and gas, do you have any view beyond E&P, or do you see attractive opportunities in the broader value chain? For example, are you looking at names leveraged to future CapEx like pipe and equipment suppliers, example like Gradia, NOV, or Tenaris, or data seismic opportunities such as TGS?
My prior success in supply and services in the oil and gas business is about average. And so, as a consequence of that, I don't think that my advice with regards to that gives anybody any durable competitive advantage. My suspicion is that when the capital investment cycle returns to the oil and gas business, it's going to return really, truly in earnest. In particular, a peaking of activity in the Permian Basin will allow increased advantage in E&P and also E&P offshore, which will benefit, I think, the broader service community. But I'm not the right guy to talk to about who might benefit and how that benefit might be distributed.
Okay, that's an authentic answer. Wrapping up here, Daniel wants to know your opinion on SCP nickel.
I don't have one.
Okay, well, that was fast. All right. Okay, so coming up in the pipeline, we've got next week. I will be here in 6 days on December 17th. We'll be doing chart analysis. So whatever charts you guys want to see, if you have any ideas of what anything you want me to pull up on the charts, be sure to go to that post and submit them. And an hour and a half after that, Rick Rule and Joel Littman will be getting together, and they're going to be talking up, following up on their last discussion, the drivers of gold and equities. And then, of course, we have the Golden Triangle Boot Camp coming up. That will be in January, on January 10th. Rick, do you have any closing thoughts?
Well, I should brag on the boot camp. Those of you who invest and speculate in the Golden Triangle need to understand that the population base up there in the triangle itself is 80% First Nations, in the broader region 70% First Nations, and they control the political process. If you don't understand the sociology and the politics of the region, you don't understand the region. I'm delighted to say that I have attracted to the boot camp Cody Penner, who is a brilliant young man who I've known for about 10 years, a real true future leader. He's a blood Tahltan, which is the dominant First Nations tribe in the region. But he's also from a mining family, and he is one of the driving forces behind Nations royalty. and he is close to all of the First Nations bands in the region. He will be able to discuss the sociology and politics of mining in the Golden Triangle with the knowledge, first of all, acquired from being part of the dominant band in the region, which is to say our hosts, but also from being a second generation mining guy and a person who is actively employed in mining investment and finance today. I'm absolutely delighted that we could get Cody, because no real rational discussion of the region could take place without that discussion. And there's nobody who I could get who I would rather have that discussion with.
Awesome. I look forward to that. I was on the phone with Derek Paddington, who's also a part of Nations Royalty, for about 45 minutes or an hour the other day. And I've kind of been lying in the grass trying to get more of that company. And I think I'm going to have to stick my head up to get a little more because the price won't come down for it.
The top quality guy too, but he's from Eastern Canada. Cody is Tahltan. He's from the Golden Triangle. His aunts and uncles and cousins and brothers and sisters are impacted. So he has studied the political and sociological affairs of the Golden Triangle at the dinner table, which is better than doing it from long distance.
That is cool. And then if Rudy is ever able to get that KSM deposit with the joint venture, I think Nations Royalty will absolutely kill it.
Well, we were oversubscribed with potential sponsors for the Golden Triangle Boot Camp, which says an awful lot about the activity that's taking place. It also, by the way, says an awful lot about the industry's appreciation for the boot camps. The fact that we had a limited number of slots and we had way more applications than we could accept says a lot, I think, about the industry acceptance of the boot camps. And it says a lot, too, about the issuers' anticipation about the prospectivity that they have. It's one thing to exhibit in an advertising feature. It's an entirely different thing to subject yourself to scrutiny by people who are willing to spend 8 hours learning about the topic. So my congratulations to the exhibitors. They're walking right straight into the wolf den.
All right, right on. Well, it says a lot about your reputation and the business that you've built as well. Rick, thank you very much for your time. This is always fun. Thank you to everyone who's tuned in. Thank you to the Rural Classroom Plus students. We will talk to you next time, and you have a wonderful rest of your day.